Good morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for Wednesday, April 9th. Well, mixed two-sided trade across the ag space overnight as price movement overall was quite small. Corn is currently tilting to the upside now, up 1 to 2 cents. Beans are within 3 cents of unchanged. Products are mixed, up $2 to $3 in a meal, while bean oil has backed off about 75 points, largely in line with the plummeting crude oil prices, which are now nearly $4 a barrel lower, stretching out to a fresh 4-year low. Wheat prices range from up about 2 cents in Chicago to up 6 cents in Kansas City. U.S. reciprocal tariffs did go into effect at midnight, taking total tariffs on Chinese imports to 104%. China has vowed to fight to the end while planning on raising tariffs on U.S. imports up to 84% starting tomorrow. With several countries appearing eager to work with the Trump administration to discuss trade issues and to work towards a more balanced and open free trade, China appears to be digging in for the long haul. U.S. equity markets remain on the defensive. Right now, futures are pointing to about a 1.5 to 1.75% lower opening at 8:30 Central Standard Time. Later this morning, we'll get a report from the EIA releasing the weekly ethanol production. Production is expected to come in just under 310 million gallons. It's down from 313 million last week. And on Thursday, we will get the USDA updated WASDE data. We see higher wheat ending stocks, no change to soybeans holding at 380 million bushels, while we've got corn stocks dipping to 1.515 billion. That's down 25 million due to higher exports. The only change we've got in South America is a slightly higher soybean production. I've got that up at 171 million metric tons versus a current estimate of 169. CONAB is also expected to be out later this week with updated production forecasts for Brazil as well. I'm guessing we'll see another 200 to 300 million pounds of bean oil usage shifted away from usage for biofuel production and into exports, given the collapse of biodiesel and renewable diesel production so far this year. Yesterday, members of the U.S. biofuel industry and big oil did formally recommend to the EPA that they raise mandates on biodiesel blending in the U.S. to 5.25 billion gallons. While that's well above the current mandates of 3.35, it was below the initial targets of 5.5 to 5.75 billion gallons. It's also well below still below the current U.S. capacity at nearly 6.6 billion gallons annually. July corn did rise up to a fresh high here, the highest level in nearly a month, with resistance now coming in at the March high at 483 and a quarter. I do look for old crop to continue to gain on new crop with global stocks tight and U.S. demand expected to remain strong into the early to middle part of the summer with the arrival of Brazil's second crop. With the U.S. farmer expected to plant over 95 million acres of corn this spring. I think that will work to cap new crop rallies. Inside trade for July soybeans as it kind of chops around this $10 level. Currently, U.S. and global stocks, I place them somewhere between adequate to burdensome. However, that can change rather quickly if U.S. trendline yields are not met. Combine that with acres falling to a 5-year low. July meal is back over $300 per ton, perhaps catching a little bit of a short covering rebound with speculative traders holding a record short there. For now, July bean oil that did hold support at its 100-day moving average. KC wheat upside leader. Near-term forecasts continue to be void of widespread rain across the U.S. Southern Plains. So far, this strength has been capped at its 100-day moving average at 585.5. Thanks for listening, everyone. I hope you have a great day.